All right, Federal Reserve groupthink is a bureaucratic disease, and that's the subject of the riff. Now, of course, the super big story is the Israel-Iran war as we await President Trump's decision on additional American assistance to Israel. But there seems to be another war. As Breitbart's John Carney put it, the Federal Reserve has gone to war against tariffs. Now, unlike the Middle East, this here is a phony war. The Fed stubbornly refuses to lower its target rate because they decided that Mr. Trump's tariffs will increase inflation. So I ask, what exactly is your model of tariff inflation? Because so far, with a 10% baseline tariff in recent months, inflation rates have actually come down, not up. Since January, the CPI has eased down to only 1.4% annually. That's below the Fed's 2% target. So tariff inflation has been missing in action. Yet Jay Powell does not refer to this. Now, Powell himself is not an economist. He's essentially a bureaucrat being driven by several hundred economists on the board staff. But again, we don't know what their model is. The whole Fed right now is guilty of groupthink. And President Trump has fingered that problem because he's been saying the Federal Reserve Board is complicit with the mistakes of Jay Powell. Groupthink is a bureaucratic disease. All these Fed announcements have 12-0 votes. So where are the Trump appointees? Where is Mickey Bowman, the new vice chair for supervision? Where is Chris Waller, the former Notre Dame economics professor? Where is some diversity of thought? And why aren't these board members questioning Powell's slippery and rather uninformed anecdotes of his new tariff war on inflation? Fed policy is completely opaque and non-transparent. We have no idea how they arrive at their conclusions. So here's a thought. During Mr. Trump's first term, he put on a number of tariffs. During the China trade talks, he implemented a 25% tariff on China. Additionally, he put 25% tariffs on steel and aluminum, 30% tariffs on solar panels, and 20% on washing machines. And yet, the inflation rate during those years was basically 2% or even less. You can't generate an economic model based simply on one variable. Now, for example, the Trump tax cuts in the first term increased incentives on business investment and production, creating more goods on the supply side, more productivity as well. And all that helped keep inflation down while the economy was growing, despite the fact that the tariffs were in place. In fact, five-year productivity for non-financial companies is now increasing at a 2.6% rate, which is spawning growth without inflation. Republican Congress is about to pass a tax cut bill that will include permanent, immediate cash expensing for machinery, equipment, and factories. Now, that kind of long-lived capital deepening will spur much more growth without any inflation, according to a recent academic study published by the National Bureau of Economic Research. Now, I ask, has the Fed included that in its economic model? Well, we don't know. They're not saying. They're just clinging to this idea that Trump tariffs, which are actually aimed at lowering trade barriers and leveling the trade playing field and opening up market access for American companies, all of which could actually reduce inflationary pressures by spurring even more supply-side growth. And, of course, Mr. Trump's ambitious deregulation policy, another counter-inflationary move. But Jay Powell never talks about any of these tax and regulatory reforms. Instead, at his press conference this week, he blathered on, let me quote, "Increases in tariffs this year are likely to push up prices and weigh on economic activity." And then he goes, "Everyone I know is forecasting a meaningful increase on prices from tariffs because someone has to pay." End quote. Huh? You know what? I know a bunch of people who think exporters will pay. I know other people who think our companies will pay. In fact, I know a whole bunch of people who don't think tariffs can be inflationary because the money supply has dropped from 30% during the Biden years to only 4% growth. Or even if a consumer has to pay more for one item, they'll pay less for another, leaving the whole price index flat. So I go back to Jay Powell and this whole Fed groupthink. Somebody should tell him that he's in charge of monetary policy, not trade policy. And somebody should tell him to please explain to the American public what the heck he's doing to their mortgage rates and their credit cards and their car loans. And that's the riff. Now,